Back on Morning Movers. Palantir will be in focus to kick off next week. It reports earnings on Monday after the close. Expectations are for adjusted EPS of 17 cents on revenue of $1.09 billion. The AI software company has rallied some 157% so far this year. It's up over 370% from its lows last November. Time now for Options Corner. Joining us to take a deeper look at this one is the Duke of Data himself, Rick Ducat. All right, Rick, let's talk about the trends you notice for this rocket ship that Palantir has been.
Rocket ship indeed, Diane. You can see Palantir up 368% during the past year. Really astronomical numbers here. But we can see, against the S&P, only 19.5%. Against its tech sector, 35%. So outperforming by a very wide margin, an outperforming sector. But when you think about software more closely, not exactly the strongest place to be right now. In fact, there's 21 companies in the S&P software sector in the S&P 500. If you take out Palantir, AppLovin, and Oracle, you get a return of negative 3.8% or so during the past year. So a very stark field of winners and losers here that's being very severely disrupted by AI. If we were to look at our chart of Palantir, more specifically here, for the most part, price has traveled within the boundaries of this upward channel type shape here with a notable outlier here after earnings that quickly dissipated and sank back to that familiar territory. However, now it did give us some important high points to watch here. This 187 level then became the ceiling during our range-bound period that took place for pretty much all of September into October here. The floor was here right around 169, 170. So we had about a roughly 17, 18 point range or so to consider here. But now the breakout seems to have happened to the upside here. We found support at that same level. The old resistance became new support. Yesterday's candle formed a Harami, which is a smaller red candle completely encompassed within the previous day's larger green candle. So a sign of slowing momentum, of stalling out a little bit here. Not really super uncommon as we would head into this earnings event here. So now we can see if we were to add some of our other studies, volume is the heaviest near current prices right about here within that range that we just discussed, more specifically right around 180 to 185 or so. So that would be an important foothold area for the bulls to hold on to if things start to slip after our earnings event here. But obviously 187 also lining up with our blue linear regression line there, our line of best fit based on closing prices. We can also see to the upside, if we were to move a little bit higher, according to our 5-year chart, we can see that the +3 standard deviation channel for our weekly chart comes in here near about 226. So that could be one other area to consider.
Okay. What's the approach you want to take for an example trade, Rick?
Yes, thinking about a bullish example trade here, pretty straightforward trade. +1, November 21st, 215, 225 call vertical at a 250 debit here. So, just looking to kind of capture upside, include that earnings event here, and, get a decent risk reward here without really breaking the bank. 21 days out to expiration, debit paid 250, max profit potentially would be 750 with this example trade here. Now, our expected move is about 14% plus or minus here. So our break even is about 9% to the upside. So it is contained within our expected move area here. One thing to think about as well, too, is that it can be kind of tricky to estimate what the price might be of a trade like this before the market opens here. If you were to try to do this trade, for example, using yesterday's prices, it would be about a 215 debit, but things have moved significantly since then. So that wouldn't really play out most likely when things actually start trading here. One thing you could consider is take the price of the options individually, subtract the short option from the long option, look at it on a chart, try to find a day where it was maybe at a similar price recently here. So that would give you a way to kind of gauge where you might find a way to kind of put in a price that would be a little bit more perhaps accurate when things actually open up here. You could be a little more optimistic as well, lower it. It's a customizable trade. It could be, designed in several different ways here. Finally, if we could pull up our chart one last time here, we can see that the expected move area for our November 21st expiration, it lines up with some other areas here as well to the upside. Our 229 area, our +1 standard deviation channel, also is where our weekly standard deviation channel that we mentioned came in. So that area near 229, 230 really stands out as a potential upside resistance area.
All right, thank you, Rick. That's an example trade there for Palantir. Those earnings due on Monday after the close of trading.